Morning, dear students. Hope you all are doing good at your home and studying hard. You all are welcome in the e-learning initiative of Cambridge International School, Dasuya. I, Mr. Sunil Kumar, PGT Accountancy in Cambridge International School, Dasuya. Today, we are going to do another topic in business studies. But before begin with the topic, let's recapitulate what we had done yesterday. Yesterday, we have started chapter number 4, Business Services, and we have read about the various services provided by the business and provided for the business. Now, what are services? Services are those separately identifiable, essentially intangible activities that provides satisfaction for wants and are not necessarily linked to the sale of a product or another services. Now, services are those things which are intangible. Services, when they are created, we have to consume it on that very time. Let's take an example of a cinema ticket. If we book a cinema ticket and if we have not seen the movie at a particular point or at a particular time, then the services are exhausted. So services, when it is created, it should be consumed. So here today we will study about the various services provided to the business, and these are the business services. In the previous slide, we have seen that there is a diagram of business services. Business services like insurance, transportation, warehousing, communication, and banking. These are the various services which is provided to the business to run the business and earn profit. So let's see the meaning of business services and its types here. Meaning, business services are those services which are used by business enterprises for the conduct of their activities. For example, banking, insurance, transportation, warehousing, and communication services. These are the various services which is required by every business uh, to run their activities. If any of these activities are missing, it means that business cannot survive in this competitive world. So various activities are provided to run the business safely and to earn profit. Here we will do banking and its types. What's the meaning of banking? A banking company in India is one which transacts the business of banking, which means accepting deposits of money from the public for the purpose of lending and investment, repayable on demand and withdrawable by checks and otherwise. It means bank takes money from the public and repayable that money as and when required by an individual. The money which is taken from the public is linked to the person who requires that money for any purpose, like for expansion of business, for establishing of the new business, or bank can invest that money into the market so that they can get return on it. So in this way, banking is working in our country. Now we will do types of bank accounts. Number one is saving deposit account. This type of bank account encourages the small savings of households. The deposits in this account are made by a persons who wish to save a little out of their incomes. Interest is paid at nominal rate, say 3% or 4% per annum. The rate of interest is less than that of the fixed deposit account. Now, basically, this account is made for households or income earning persons or a service person who wants to save little out of their income. And this type of account fetch three a very nominal rate of interest, and nowadays it is like 3% per annum, which is less than the fixed deposits account. Second one is current deposit account. These deposit accounts are most suitable for business organizations. In this account, the depositor can deposit money any number of times and can withdraw it as and when required. No interest is paid on these accounts. Rather, the bank may charge some service charges. A current account deposit or current deposit account is basically made for businessmen. They can come to the bank and deposit money as many times as they can in a day. They can withdraw that money as and when they require. If they require that money 3 times, they can go to the bank, they withdraw that money 3 times. If they require that money 10 times, they can go to the bank and withdraw that money 10 times. In the same way, they can deposit money as many times as they want. So this is basically made for business organizations or businessmen, and no interest is paid to the account holder. Rather, bank charges some service charges on this account. Next type of account is recurring deposit account. It is also called RD. In this type of account, a depositor deposits a fixed amount of money on an annuity basis, say on monthly basis, for a fixed period of time. This money cannot be withdrawn before the expiry of that fixed term except in special circumstances. The rate of interest on RD account is generally higher than the saving account deposits. Recurring deposit mean again and again. In these types of accounts, a person deposits money on monthly basis. Every month, like if he wants to deposit 1000 in a recurring deposit, he has to deposit 1000 every month. And he cannot withdraw that money before the expiry of that particular time. It may be 1 year, it may be 2 year, it may be 3 year. It depends how long you have taken your recurring deposit account. The rate of interest on recurring deposit account is higher than the saving deposits account. Number 4 is fixed deposit account. It is also called FD. Money is deposited in fixed deposit account for a fixed period of time, say 1 year, 2 year, 3 years, or 5 years. The rate of interest is higher than that of saving deposit accounts. The longer is the period of deposit, the higher will the rate of interest. This is so because banks can use the money for a longer period. Fixed deposits, it means when anybody deposits some amount for a fixed period of time, that is called fixed deposit. And the interest on this deposit is higher than that of saving account. And the next is multiple option deposit account, which is also known as MODA. It is a combination of saving and fixed deposit account which provides specific options to the depositors. It is type of saving deposit account in which amount of deposit is excess of a particular limit gets automatically transferred to the fixed deposit account, and in case of sufficient funds are not available in saving deposit account to honor a check issued, The required amount gets automatically transferred from fixed deposit account to the saving deposit account. The account holder has two benefits from this account. He or she can earn more interest, and it lowers the risk of dishonoring a check. Multiple option deposit account is a mixture of two accounts, that is saving account and fixed deposit account. When anybody issues check to a person and that person goes to the bank and uh, gives the bank on the counter gives the check on the counter of the bank, and if the money is not, or we can say that sufficient money is not in the bank account of a person who has issued the check, then if he would be having a multiple option deposit account, then the money is transferred from fixed deposit to his saving account so that the check cannot be bounced or dishonored. In the same way, if extra amount is lying in a saving account, that amount is transferred to the fixed deposit account. So in this way, multi-option deposit account works as a saving as well as fixed deposit account, and it is they work as a complementary to each other. Whenever there is a shortage of fund in saving account, it is transferred from fixed deposit account. If more money is lying in the saving account, it is transferred to the fixed deposit account so that more interest will be earned from that money. So in this way, multiple option deposit is very good option for everyone, and it works for the organization and provides good rate of interest, and it lowers the risk of dishonoring of checks. Next, we will cover the banking services provided by the bank. It covers bank draft, bank overdraft, and cash credit. Number one is bank draft. A bank draft is also called demand draft. It is an instrument which is used for transfer of funds. Anybody can obtain bank draft after depositing the amount in the bank. A bank draft is drawn by a bank branch on other bank branch at the place of destination. The bank charge some commission in lieu of issuing it. Here is the specimen of demand draft. Name of the payee is written Mahindra Singh Maurya, 1 crore 25 lakh, and there is date column. Signature of the person is there. State Bank of India is issuing this demand draft. Now, bank draft or a demand draft, it is an instrument through which we can transfer funds. It can be obtained by anyone. We have to deposit certain amount of money which we need to send to other place. This is drawn by one bank on another bank. For this services, bank charges some commission. Next is bank overdraft. Bank allows a customer to overdraw his current account balance up to an agreed limit. The customer has to pay interest on the amount overdrawn by him. It is temporary facility. The rate of interest charged by the bank is less than that of cash credit. Now, bank overdraft, this facility normally given by the bank to a customer or a person who is having current account with the bank. And we all know that current account is of a business or a businessman. So, bank knows that a businessman will deposit the amount which he withdraws or he over withdraw from his account, because in a day businessman makes number of transactions in the bank. He deposits his money number of times in his current account and withdraws that money again number of times from his account. So in this way, bank develops confidence on that person and he allows to over withdraw that money from his bank. Over withdrawing of money is sort of loan taken from the bank, and on this loan, bank charge some rate of interest. This facility is not a permanent facility, it is for a temporary time basis facility. And overdraft, the rate of interest on overdraft is a little lesser than the rate of interest on the cash credits or other types of loans. Next is cash credits. A cash credit is a short-term cash loan to a company or an individual. The borrower is sanctioned a credit limit up to which it may draw amount from the bank. The credit limit is determined by the bank's estimation of the borrower's credit worthiness. The banks provide this type of funding, but only after the required security is given to secure the loan. Cash credit is one type of a loan given by the bank after getting mortgage any property from the borrower. The borrower can be a company or an individual. The bank makes the credit limit of the borrower on the basis of his credit worthiness. Bank provides the loan only after getting some property which is mortgaged against the loan by the company or an individual. So in this way, these are the various facilities provided by the bank to the society or to the business. Thank you for listening it very patiently. Tomorrow we will be back with another topic. Till then, stay safe, stay healthy, and stay at home. Thank you.